things that I also wanted to ask you, um, regarding getting these type of loans, is what different type of loans are there for maybe a self-employed person or a person just buying a regular home or an investor? What type of loans are there? What type of products are there for them to get into a property?
Right. So there's a whole bunch of them, but I'll start with the normal government programs, which is FHA. You could buy a property with 3.5% down. You could even buy from a condo all the way up to a fourplex with three and a
Okay.
half percent down. We also have conventional. Conventional starts at 3% down, but you have to be under a certain income percentage, which in Miami is really hard to be under that income and buy a house with a conventional loan. So really, conventional loans start at 5% down.
Okay. And the difference between conventional and FHA for the debt to income ratio, which is probably the most important thing for you to get qualified, is what, like 50 and 57 or?
That's right. Yeah, conventional typically lets you get up to 50%. There's a lot of other factors that go into it, like credit score, how much of that's going to go to your housing ratio, how much it's not. But yeah, it's between 50 and 57. But a big difference, I think, with FHA is that it has the mortgage insurance on it. The mortgage insurance premium on FHA is a lot more than conventional, and it also never goes away. It stays for the life of the loan until you sell that property or do a refinance on it.
And for conventional, you don't have a PMI?
Well, you do have mortgage insurance for conventional if you put under 20% down,
Okay.
but it goes away once you
Yeah,
have
once
that
you get
equity.
past 20.
Yeah,
What about in the FHA loan?
FHA, it stays
It stays forever.
for the life of the loan. Yeah,
Okay. Oh, wow.
and the premium for FHA is also a lot higher.
And the PMI is pretty high, right? Normally,
Yeah, I
it's
mean,
a big expense.
it could be 300-400 bucks.
Yeah,
Like,
it's a month.
yeah, with conventional, if you have good credit, I mean, it could be $50, $70, something like that.
Okay, that's not bad at all.
Yeah, and then
Yeah.
going into like the other programs, which are really popular right now, is the self-employed program. So we have the bank statement loan. You don't have to show any tax returns or anything. You qualify just based on the deposits that you make in your bank for 12 months. We take that and we get an average of it, and that becomes your income. You still have a DTI, a debt to income ratio, with that loan as well. It starts at 10% down. We also have a profit and loss program. We just look at a profit and loss statement for the last 2 years that starts at 15% down. Just has to be prepared by CPA or a tax preparer. And then another popular one now is the DSCR loan,
Okay.
which is the program that you use for rental properties, starting at 15% down with no mortgage insurance. When they do the appraisal report, the appraiser just has to say that the projected rent for that property is going to at least cover the mortgage payment, and it's the total mortgage payment.
So it has to cover it at least, or does it have to be like a certain percentage
Just
above it? Just at least.
Yeah. So if your
Okay.
principal, interest, taxes, insurance, HOA, the total housing
Everything is
payment,
covered.
let's say it's $1,000. If the appraiser goes out and says it's going to rent for $1,000, You're good.
You can qualify for the loan.
Yeah.
Okay. And for those, how much you have to put down again?
it starts at 15%.
15%. Okay.
Yeah.
And essentially, for those, let me ask you this question: is there a limit to the amount of money you can borrow with a DSCR loan?
They probably have like a cap like at 3 million.
Okay. So you can
on
get,
one loan.
yeah, one loan. Okay.
And you could have as many loans as
wow.
you want. You could have 100 loans, 1,000 loans.
So essentially, if you have you said it was 15%, right? Down.
15%.
So if you have the 15% down, which 15% of 3 million, that would be what? $450,000. If I have $450,000, right? I can go and purchase a $3 million property with a DSCR loan just if the property's rent covers the mortgage.
That's right. Yeah.
Okay.
And even if it doesn't cover, there's options for that. The rates are higher, and they might
Okay.
make you come in with more money. That's like a case by case
Yeah.
scenario, but they'll figure something out.
Okay. So this is